What a crazy week it has been in the markets. From the last week of October to pretty much now midway through November, we've had some huge market volatility with the market sectors reacting differently. We also had a new president-elect and also the news of a potential COVID vaccine in the making coming soon. And then also at the end, we'll take a look at my portfolio and what I have been purchasing over the past few weeks. Alright, so let's start things off with the S&P 500's return for the month of October. As you can see here on the chart, we actually started fairly good in the beginning of the month, but then towards the end of the month you can see we ended up losing momentum and closed the month of October with almost a negative 3% return. Now, if we take a look at the day-by-day basis of October, we can see that in the beginning of the month, we had a pretty good streak, but then towards the end of the month is when we had the downward move, specifically over the last week, where we had 3 negative days back to back to back, with one of those days being well over 3%. Now, the reason why I'm bringing this up is just to highlight the fact that you should always try to stay invested because the markets can turn at any time. And I think that if you start buying consistently, even through the small dips, it's ultimately the way to go. And waiting for a huge 20-30% downward move or correction by the market is honestly not worth it, at least in my opinion. Okay, so let's check out November. So the first 4 trading days of November were super green, each day well over 1%, and that momentum continued into the following week of November. And if we add the month-to-date return so far in November, the S&P is up almost 10% already for the month, which is crazy. And again, if you sold off in October, or if you didn't purchase any stock during that dip in October, you would have missed out on these gains that we've had so far in the beginning of November. Alright, so what happened in November? Well, for starters, we had the presidential election on November 3rd, and you would think that with the uncertainty that comes with an election, the markets would probably trade down a bit. But as we know, the markets were actually up and rallied the first 4 days of November, even with the news of Joe Biden now projected to become the next president of the United States. Now, I have read some articles on the best stocks to invest under a Biden administration, and I want to just give my 2 cents real quick on this subject. Okay, so I believe if you have a long-term portfolio already made, I wouldn't sell out of any holdings or make any drastic changes. Yeah, there could be a stock or two you might want to add, and that's totally fine. But just keep in mind that if you're in this for the long term, say 10, 15 plus years, no administration is going to make or break your portfolio. Just continue to follow the companies that you already own, and if they continue to be strong and relevant businesses, there shouldn't be any reason to sell. Basically what I'm saying is, don't sell because the party you wanted to be in office is not, or vice versa. Alright, so I also wanted to mention that we're actually in the ideal political landscape in the markets, at least per history. With a split Congress and a Democratic president, the market has actually had the highest returns under this political setting compared to the other types of scenarios. Now, are we going to have great returns for the next 4 years? Honestly, I don't know, but I think the play is still to continue to invest and stay invested for the long term. Moving on, another big headline in November is the potential for a COVID vaccine to come soon. Pfizer did announce that their COVID vaccine was 90% effective, and this news, as you would imagine, was received very well by the markets, as the S&P was up over 1% on that day, which doesn't seem like much, but you also need to keep in mind that this happened after the big run-up that we had earlier in the month, and the stock market actually still managed to rise on this news. Now, in terms of the vaccine, 90% effectiveness basically means that the vaccine was able to prevent the virus from infecting people that had no prior infections. And this is really good news, as you would expect. This definitely will help control the spread of the virus and will get us much closer to normalcy. However, this won't really affect us now. We still need to produce the vaccine at scale and then distribute the vaccine to the people. But yeah, it's still good news nonetheless. Alright, so before we get into my portfolio, I wanted to show one last chart here of the S&P 500 divided into sectors. And I want to take a look at the past 5 days and who were the biggest winners. As you can see here, energy, financials, and industrials were the top winners after the announcement, which were the sectors that were pretty much hit the most in March and April when the COVID started to spread. And as you can see, energy was the best performer at 16% over the past 5 trading days. And of course, I don't own any energy stocks, but I do own some financials and industrials, which was really nice to see. We did have some losers over the past 5 days, which included tech stocks and the consumer discretionary stocks. They were both down over the past 5 days, but if you look at the past month, you can see that both sectors have taken a hit as of late. But then again, these stocks, especially the tech stocks, were up massive over the past few months, so it is reasonable for them to start slowing down. Now, the reason why I'm pulling this chart up is just to show the importance of diversification and also to highlight the transfer of money between sectors. As you can see, a lot of the money transferred from energy, financials, and industrials to tech over the March and April timeframe, but now we can see that money starting to jump around back into the energy, financials, and industrials and other sectors. Alright, so last up here we got my portfolio, and this is probably going to sound super boring, but my strategy isn't really changing. It's not going to change because of the COVID vaccine announcement. It's not going to change because of the new president of the United States. I'm going to continue to buy the same stocks that I already own. I don't think I'm going to be adding any new stocks though. That could change over the next few months, but as of right now, I'm not really looking into any new stocks. I'm just basically staying the course. I'm going to continue to try to buy consistently, and whenever there are dips in the markets, I will try to take advantage and buy a little bit more on those days. Now, I do want to at least show some of the stocks that I have been purchasing over the past few weeks, so let's get right into it. Over the course of the last week of October, I purchased Verizon, Bristol Myers, Visa, Johnson & Johnson, Johnson & Johnson again, JP Morgan Chase, Bristol Myers again, Johnson & Johnson again, Intel, Hershey's, Domino's Pizza, Walmart, Domino's Pizza again, and Clorox, a stock that I didn't see myself buying anytime soon, but I did end up picking up 1 share in November. So here's a recap of the stocks that I have purchased over the past few days or the past few weeks. I've purchased mostly just 1 share of each stock. With Johnson & Johnson, Bristol Myers, and Domino's Pizza, I've bought 2 or 3 shares. Now, the reason why I've purchased more of those stocks particularly is mostly due to the fact that I think that they're at a pretty good deal, and also my stock allocation for these stocks in my portfolio is pretty low, and I do want to raise them moving forward, so I thought that this was a good opportunity to pick up multiple shares. But yeah, that's pretty much it. Hopefully the video was helpful, and thank you so much for watching.